I've known people who can make thousands of dollars a month just on the dividends from the stocks that they own.
It's the boring but booming investment strategy shared by many billionaires like Warren Buffett or Bill Gates, who have all learned how to double down on their investments.
For those who are patient, it's a great way to really leverage your returns over time.
But you really have to know what you're doing to make dividends work and how to avoid the potential risks.
When you see a company that has a dividend yield that looks too good to be true, it often is.
Now, when you do know what to look for and you have the tools to make dividends really work for you, this is something every investor can use to completely transform your portfolio, no matter what the market is doing.
During volatile times like the ones we're having right now, you still have some stocks that you can kind of consider to be safe anchors.
3 of our top MarketBeat analysts are diving into dividends and what they've learned to really leverage dividends to build true wealth in today's market. Let's dive in. Now, before we dive into the basics on what these are and how they work, I want to share just how passionate many of our MarketBeat analysts are about dividends. And that includes our company's founder, Matt Paulson. He actually wrote a book on dividends called Automatic Income. This book is all about using the power of dividend investing to beat the market and generate passive income for life. We're going to go over some of these details in the video today. You're also going to hear from our regular 3 MarketBeat analysts you'll see on this channel all of the time. Thomas Hughes, Chris Markoch, and Gabriel Osorio-Mazzilli are all passionate about dividend investing for good reason.
Dividends are probably the #1 reason to own a stock. The business is in business to make money and profits, and as an owner of the business, an owner of the stock, you want to share in those profits, and that is the dividend.
Dividends are a way that management rewards a shareholder by sticking around through the good times and the bad times.
I think every investor has room for dividend stocks in their portfolios. You just get income that you can count on no matter what's happening in the market.
All right, let's get to the basics. What exactly are dividends? Well, simply put, they're a portion of a company's profits paid out regularly to shareholders, and that's you when you own the stock. Think of it as getting a thank you payment just for being a partial owner of the business. When you buy shares of established companies like Johnson & Johnson, Coca-Cola, or maybe Procter & Gamble, you're not just hoping the stock price goes up. You're also earning cash payments several times a year, regardless of what the stock market is doing that day. So while it's kind of like guaranteed cash, these payments are not enough to become a millionaire overnight.
Dividend investing won't make you rich real fast, but for investors over time, dividend investing is a way to catapult your returns and create those large multi-million-dollar portfolios that can sustain a retirement.
This is crucial to understand. It's not a get-rich-quick strategy. Dividends are all about the long game. So it's really a methodical approach to building wealth over time. So let's look at exactly how that works. The best dividend companies don't just pay dividends, they actually increase them year after year, sometimes for decades. Companies known as dividend aristocrats have increased their dividend payments every single year for at least 25 consecutive years. There are also dividend kings who have continued dividend payment increases for 50 years or more. That's all through recessions, market crashes, and even pandemics. That kind of reliability is incredibly powerful for building wealth over time. How much wealth you build really depends on how many of the right dividend stocks you own.
How much income can somebody make per month on dividends? A lot. It really just depends on the stocks that you pick, and it depends on how much they pay out.
The key takeaway here is that with enough capital and the right dividend stock picks, you can generate significant passive income, something that becomes increasingly important as you approach retirement. All right, now let's talk about compounding. Einstein allegedly called it the 8th wonder of the world, and for good reason. When you reinvest your dividends to buy more shares, Those new shares generate additional dividends, creating a snowball effect. This is where MarketBeat's dividend calculator really comes in handy. Let me show you how it works. Let's say you invest $10,000 in a stock that has a 4% dividend yield that grows by 7% annually. Now, if you reinvest all dividends and hold for 20 years, let's see what happens. That initial $10,000 could grow to over $76,000, and nearly $40,000 of that would come from just dividends alone.
As an investor that's getting a little closer to my retirement age, I like to start thinking about maybe taking a little bit of my growth risk off the table. But you also have to think about, if I'm in dividend stocks, how much can I earn in dividends to make it into my retirement years?
This is exactly why tools like our dividend calculator are so valuable. They really help you project your income stream decades into the future. But MarketBeat's dividend calculator doesn't just show you potential returns. It also lets you compare different dividend growth scenarios. You can see how much income your portfolio could generate in retirement and calculate the impact of different contribution amounts, and then visualize how dividend reinvestment accelerates your wealth.
One of the things that I like to do when I look for dividend stocks is to use the MarketBeat dividend screener. You can say, this is how much money I have in this stock, or to put into this stock initially. This is how much I plan to add to it over the years. This is where their dividend yield is. This is how their payout is. And it'll calculate all that for you.
Beyond the calculator and screener, MarketBeat's web development team has also created a list of dividend aristocrats to identify the most reliable dividend payers. The ex-dividend date calendar, so you never miss a payment, and compiled a detailed dividend history for thousands of companies. All of these tools are completely free on MarketBeat.com, and I'm going to put all the links in the description below so you can check them out for yourself and even follow along in this video. Like every investment, dividends also have some risks. One of the biggest dangers is falling into what experts call a dividend trap.
Most fall into the trap of seeking higher yields. And yields are when the stock price is so low and the payment is so high that the yield on the stock's dividend seems crazy attractive. Might be 8%, 10%, even more than that. But the question that every investor should ask is, can the company really afford that dividend?
The biggest risk that you have really is if a company that's been a reliable dividend payer stops paying their dividend.
This is why doing your research is so important, and why we've built these tools to help you evaluate dividend sustainability before you invest. So if you are looking to start building your own dividend portfolio, here's a simplified, safer approach.
There's far fewer successful growth companies than there are successful dividend companies, so it is a far easier strategy to invest in dividends, but also it's far less risky. It's a great strategy for investors who are looking to reduce risk and to generate income. And for those who are patient, it's a great way to really leverage your returns over time. You're going to want to target high quality dividend growth stocks, companies that are growing their distribution annually. You're going to want to buy them when the stock prices are low, reinvest your dividends, build your position, and build leverage for when it rebounds and for when it advances.
First, decide what percentage of your portfolio you actually want in dividend stocks. Then you can use MarketBeat Screener to find companies that have sustainable dividends. Make sure to focus on companies with histories of dividend growth, not just those high yields. Also consider using both individual stocks and some ETFs for diversification. Remember, dividend investing is typically a long-term strategy. The magic really happens when you give those reinvested dividends time to compound. Again, the biggest compounding success will come from choosing the right dividend stocks. Let me show you how our dividend screener can help you find quality dividend stocks. Again, you can follow along and try this for yourself using the links I have right in the description of this video. If you want, you can even pause quick and follow right along on the website. Okay, so when you pull up the dividend screener on MarketBeat.com, you can filter by dividend yield, payout ratio, which is really a measure of sustainability. You can also look at the years of consecutive dividend growth, the industry sector, market cap, and much more. It really makes it easy to find companies that match your specific investment criteria and your risk tolerance, which is also important. So if you are ready to explore dividend investing for yourself, your first stop should be MarketBeat's dividend calculator. Play around with some different scenarios and see how changes in dividend growth rates might affect your returns, and discover how powerful this boring strategy can really be. Dividend investing might not be as flashy as crypto or options trading, but it is a proven wealth building strategy that works in virtually any market environment. As Warren Buffett says, do not save what's left after spending, but spend what's left after saving. With dividend stocks, your savings can work even harder for you. That's all we have for today. If you found this video helpful, give the video a thumbs up and let us know if you have any questions about dividend investing, or share your strategy of how you're using dividends to build your wealth long term. Thanks for watching, everyone, and as always, happy investing.